alone is not enough. In 2026, we have taken a step further to modify and update SMC strategy to the latest version that anyone can learn this simple strategy, apply it to their chart, and consistently generate profit. Now, the normal SMC we know is marking your market structure and taking trades, but then we have taken a step further to make more inquiry, make more research, and then develop something that everyone can simply learn and then apply. In this strategy and in this video, I'm going to be taking you through 4 simple steps. The first is going to be directional bias. The second is point of interest. The third, I'm going to be giving you guys liquidity concept. Lastly, where the update comes in, LTC confirmation. This is an update that you wouldn't love to miss. Stick with me to the end of this video as I give you a premium and a paid knowledge for free. Okay, now as an SMC trader, when you open your trading view, what is that first thing you look out for as an SMC trader? You want to understand the direction at which the market is going to. That is what leads us to the first part, which is directional bias. As an SMC trader, it is very, very important that you understand the direction at which the market is heading to. And how do you do that? This is how simple it is, right? When you approach your market, the first thing you mark out the highest point of the previous trading range. This is the highest point of the previous trading range, and this here is the lowest point of the previous trading range. What does that tell you? That tells you that we have a trading range. Now let's mark out the trading range completely. We have a trading range. This here is an uptrend. After you are able to clear out these two zones, what do? You mark out this highest point and lowest point. That means this low here becomes your swing low, indicating that it is the lowest point of this trading range. This high here is not regarded as a break of structure. Firstly, it's regarded as the highest point of this very trading range. That makes it your swing high, right? So after you are able to mark out this swing high, the next thing you are looking out to see in the market is to see a pullback to a certain level of support, right? After this pullback, you hope to ride the market from this angle to give you another higher high. So until the market pull back and then expand, take out the previous high, that is where you can say, okay, this high here is now a break of structure. You get, meaning that it has broken structure to the upside. This alone entails and gives you an information that, okay, the market is in an uptrend, since it's giving us a series of what break of structure. So when you see this in the market, the next thing you are supposed to do in this place is to update your swing low, meaning you are updating the lowest point of this trading range. Now immediately we have a higher high. This means that this high has lost its validity as our swing high. We now have a new high. Immediately you have a new high, what do? You update your swing low. You get, now this is our new swing low. What are we expecting in this aspect? What we are expecting is the market to pull back down again to a certain level of support, since we are still in an uptrend. Then after pulling back from here, after pulling back to this level of support, it gives us an entry from this place, which our LTC comes in. Then after giving us this entry, we hope to ride the market again for another expansion. Immediately we get an expansion we are looking out for. This high lost its validity to be our swing high. It will now become our break of structure. That is where this break of structure comes in. After getting another higher high, the next thing to do is to update your swing low, meaning that we are moving forward. You get, so immediately we update our swing low. The next thing we are looking out for is that this swing high here, this high should pull back to a certain level of support. This support here, then give us an entry model here so that we can ride the market for another expansion. You see, immediately we get this high here lost its validation of being our swing high. So this here becomes our break of structure. That is how simple it is. By doing this, you have officially understand market structure. This is simple market structure. You have understand the way the market moves. Remember, we started by having a low, we have higher high, we have lower high, we have another higher high, we have a lower high, we have another higher high, we have lower high and a higher high, telling us that we are currently in a bullish market. You get, this is clearly a bullish trend. So how about a scenario whereby this swing low get disrespected? Remember, immediately after this high, we are still expecting that. Immediately after this higher high, we are still expecting that the market comes to a certain level of pullbacks, to a certain level of support here. Give us another entry model so we can be able to buy the market. As simple as that, right? How about the situation where the market comes into this place, instead of respecting this swing low, it came disrespected the swing low? What do we expect in the market when we see that occurrence? When you see this occurrence, it means that the market has actually changed character. The market has shifted from going bullish, is now looking at going bearish. So this becomes our change of character. It means that the market has changed its direction. You get. So when you see this occurrence, immediately you switch from marking out your swing low to marking out your swing high. You get. You now look at your swing high being protected, because what you are now looking at is what? Lower prices. So you mark out the highest point of that very trading range. Now this highest point indicates that this pullback that is coming out from this place should not go above the swing high. If this pullback should go above the swing high, it means that the market has actually changed from bearish to bullish again. So this high should be protected at all costs, so that we can respectfully follow the market. You get. Now when this occurrence happens, the next thing to look out for is that we look forward to take trades from a certain level of resistance. We want the market to pull back to a certain level of resistance, give us a mode of trading from this place here, and then after that it gives us lower prices. We are very much more interested in taking trades from this place here. You get. This I've showed you is a simple market structure. Now I'm going to show you a complex market structure, the way the market actually moves. This is to give you a fair idea of what we want to talk about. Okay, so let's move down to the complex market structure. When you open the market, this is what you are going to see. Now, the first example was a simple market structure, just to introduce you to what you are looking for. But when you open the market, this is what you are going to see, as complex as it looks. But then there is a very simple way of understanding this complex market structure. We're going to give you a simple way at which you can understand this market structure. So stick with me as we dive into it. You look out for the highest point and the lowest point of the previous trading range. So now we have the highest point and the lowest point. What is the next thing to do? You mark them out clearly. Now this is the highest, this is the lowest point. We call this our swing low. After marking out the lowest point, the next thing to do is to mark out the highest point. This here is the highest point. Immediately you are able to mark out these two zones, everything becomes much more easy and simple to understand. Right now, once you have a higher high from the 4 hours time frame, the next thing to do is to start looking for opportunities. This internal structure often occur in the 15-minute time frame. So the next thing that you are going to do is to look for opportunities of trading inside of this trading range. You get, of taking 15-minute time frame trades. As you can see, inside this trading, we have an internal break of structure here. When you see this, you look out to take trades from a certain level of resistance upon proper LTC confirmation. The LTC is the most important aspect of this video, because that is what allows us to take trades in this updated SMC strategy. Okay, when you take this trade, you target 4 hours time frame support zones, okay, and point of interest. So after targeting it, when it gets here, it gives us LTC. We ride from here again to the swing high. Again, now once this pullback phase is completed, it gets to a certain level of support. We take our buys. Once these buys clear out this high, that is when we now say, okay, we now have a break of structure in this place. Now you can now see that we now have an external break of structure. After this external break of structure, what do we have next? We have a higher high. Once you confirm that we now have this higher high, what you should do next is that you should update the lowest point of your trading range. You get, this here has suddenly become the lowest point. Why? Because we have another high that has already cleared out this high. You get, so this here has become your swing low. Now the mistake most people make is to think that this here is your swing low. That is one of the mistakes most people think. This is not your swing low. This is an inducement. This is a trap. This is liquidity, where the market has trapped people that don't understand a proper market structure. They put their buy limit here. The market will come, trigger the buys, behave as if it wants to respect it, gets to travel a few pips, then before you could tell, it clears all the liquidity down to the higher time frame support level, where you have your point of interest. Right, when it comes here, we look out to take opportunity from inside this place and selling to the upside. You get, and when this opportunity comes, we look for this opportunity, we sell here, we clear these highs here, making this place now a break of structure. All right, immediately after this break of structure, what else are we looking out for? We are looking out to update our swing low. You know, we are in a bullish trend, so we need to constantly update the lowest point of our trading range. let me bring this back. We need to update it. So if this is the swing low, this is the swing high. The most important aspect of marking the swing low and the swing high is to tell you the current place that you are trading. You get the current trading range that you are in. You understand? So this is our swing high. So immediately you mark out the swing high. What you look out for is to look out for opportunities to either sell from here down to a level of support, or you allow the market to travel down to this level of support, take out a few liquidity it wants to take. Then when it gets here, it gives you LTC and other conferences from this level of support so that it can enable you to take trades, right? But then the aspect whereby the market comes here, play around, then disrespect the swing low. What does this tell us? If the market disrespect the swing low now, this place automatically becomes our change of character, right? It becomes our change of character, meaning the market has changed from going bullish. To now coming bearish. That means that the market has shifted from going up to coming down, which is uptrend and downtrend, right? Pretty simple. When you see something like this, you have a change of character. What does that tell you? You start looking out for opportunities on how to sell the market. What we are expecting in this aspect is that the market comes back to a certain level of resistance. When it gets here, it gives us what? Lower low. You get. Now remember what I told you. This is not your swing low. Why? This is not your swing high. Why? Because it occurs inside of the 4 hours time frame trading range. So it is likely to be used as liquidity, to be liquidated so that it can favor the overall low and the overall points of interest, which is somewhere around here. You get. So that is something you look out for consistently. But then this is just what everyone has been saying about market structure and SMC strategy. But then we have updated and involved a particular pattern that you must see when the market comes to this place that allows you to take high risk to reward ratio trades and multi-confirm that truly your bias is correct. All right, I'm going to show you that at the end of this video, and that is LCC confirmation. Stick with me. Now, after showing you the complex market structure, I'm going to give you the multi-time frame market structure. After the multi-time frame market structure, we go to the live market, implement all we have learned from this line in the live market, and see how we can catch opportunity and trade that will give us high risk to reward ratio. Let's get down to business. Let's take the red line to be 15-minute time frame market structure and the black line to be 4 hours time frame market structure. Now let me use this line to explain this thing to you. Now when the 4 hours time frame is giving us series of higher high, lower low, and higher high, the 15-minute time frame is just giving us like a more detailed information of what the 4 hours time frame is doing. You get. Now in the 15-minute, now you see that we have series of break of structures. Immediately you enter your trading view, go to the higher time frame first. In the higher time frame, we mark out the lowest point of this trading range. The lowest point is here. We call it our swing low. Then we mark out the highest point. Where's the highest point? This is the highest point here. We call it what? Call it our swing high. Remember, it's not firstly a break of structure, but a swing high. Upon other activities being carried out in that very trading range and an expansion, that is what makes this one now a higher high, and then this one a break of structure. But listen to the explanation I'm about to give you. That's the most important aspect. Remember, when 4 hours time frame is going like this and coming like this, we need this little movement from the 15-minute time frame in order to understand what the 4 hours time frame is about to do. Now, this thing is just very simple. It entails that 15-minute time frame gives detailed explanation of what 4 hours time frame wants to do. Now, when 4 hours time frame was pulling up, we see that the 15-minute time frame, we have series of break of structure, break of structure, break of structure, break of structure. Then when the 4 hours time frame is about to pull back, what you see from the 15-minute time frame is that you see a change of character telling us that, okay, 4 hours time frame is about to pull back to 4 hours time frame is about to pull back to a certain level of support. You get, to a certain level of support so that we can be able to take a buy since the market is in an uptrend. Now, our interest is not in this 4 hours time frame. Our interest in this strategy is the 15-minute time frame. You get, our interest is not the 4 hours time frame. From the 15-minute time frame, we have seen that, okay, we have changed character. Immediately, you spot out your point of interest from a certain level of resistance, and upon proper LTC confirmation, you look forward to take trades from 15-minute time frame and targeting 4 hours time frame point of interest, you get, and support level. In terms of selling, in terms of buying, you are buying and you are targeting 4 hours time frame resistance level and and 4-hour time frames highs. You get. So now when we get LTC confirmation from this place, it gives us a high risk to reward ratio and a more confirmation that the market is actually about to sell. You get. As simple as that. Now, after taking trades like this, when it gets to a certain level of support, we are still very much interested in seeing the same thing. You get. Now we have a change, the last break of structure in 15-minute time frame. Then we have this change of character, indicating that what the market has actually changed from going bearish to bullish. That is internally. Remember, these are all internal structure. The market has changed from bearish to bullish. So the 4 hours time frame is about to give us an expansion. So we need to follow the move. How do we follow the move? You need to spot out your order block from a certain level of 15-minute time frame support level. You get. And now when you spot this out, you use LTC to get a more risk to reward ratio and a more confirmation. What is your target? Your target is the 4 hours time frame highs. You get. Now with all these inputs in place, you'll be able to get a high risk to reward ratio trade. You understand? I believe I have been able to give justice to this, and everything we have learned here, we are going to apply it to the chart, and then we see how it works. If you are new to this channel, consider subscribing, turn on the notification bell so that new update like this will be getting to you on time on trade breakdown, market structure, and other forex insight. You understand? Share this video to your friends and your family who are also trading forex or who are struggling to come get updated strategy on how, and apply it so that we can all consistently generate money from the forex market. Again, this is how 15-minute time frame look like. When you switch from 4 hours to 15 minutes, this is what you see. But then when you add 4 hours, it becomes like this. So don't get confused, okay? Let's go to the live market and work. You arrived your chart, and this is what you are seeing. What are you going to do in this aspect? That is a question, right? Remember, the first thing I told you is to mark out the high and the low of the previous trading range. This is the high, this is a high, and this is the low of the previous trading range, right? And then we had a break of structure here. Remember, this thing I'm marking here is in 4 hours time frame. You can see it, right? Now we have a break of structure here. What should we mark next after that break of structure? The highest point, we call it our swing high. Then we mark out the lowest point of this very trading range, which is here. We call this one our swing low. So after marking this, a scenario where we expect the market to come into a certain level of support, then give us higher price. The market came in, made some reaction, then disrespected this swing low by continue going down, making this swing low to become a change of character. That simply indicates that the market is no longer interested in buying, but then the sellers has taken over the market. So immediately the occurrence of this, what do we expect? We expect the market to pull back to a certain level of resistance, right? Then give us lower prices. But then the market will not just move in one line to the resistance level and give us a pullback. No, that is not going to happen. So the market will have to give us a series of reactions from the 15-minute and the 1 hour time frame. Okay, so now we are going to go through 1 or 2 reactions from these places. So this is where the change of character occurs. So this is the low. Remember, where we were was 4 hours time frame, but here is 15-minute time frame. See what happened here. Now when the market was giving us lower prices, we have a break of structure here. This was the last break of structure. Then after this break of structure, we had a change of character, indicating that what the 4 hours time frame is about to go back for a pullback. So the 15-minute time frame is going to give us a change of character so that we can be able to follow the market and catch our moves. You get. So immediately after this, the market pull back. Immediately after this, the market pull back to a certain level of 15-minute time frame support. Right. After this, it gives us a high, making this former swing high to become a break of structure. So the 15-minute time frame is very choppy. The 1 hour time frame make the chart very much organized. You get. So immediately we had this break of structure, we mark out the swing low and the swing high. So this becomes the swing high, and then we had the swing low. So after this, what was the next thing that occurred? The next thing is that we got our order block, that's our point of interest, from a certain level of 15-minute time frame support. You get. And when the market came to this place, when the market traveled back to this place, we got over 27 risk to reward ratio from this single move. You get. From here up to this place, you get. We got over, from here to here, we got over 27 risk to reward ratio. And the good part of this trade is that we actually shared it on live. We actually shared it live on our YouTube short because we normally drop YouTube shorts every day to give you market breakdown. One of the most reason why you need to subscribe and turn on your notification bell so that you can be able to see our update and then leverage on the opportunities provided. You understand? So immediately after we get our LTC confirmation from here, we got over 27 risk to reward issue. Immediately price got over the swing high. It lost its validity as swing high. It now officially became our break of structure. You can see that. So this is how the market moves. So it continued traveling until it got to this place, right? It got to this place here. We had a series of break of structure, break of structure, break of structure, indicating that the market is currently in a bullish trend, right? Now, see this last break of structure we had here. This was the last break of structure. After this break of structure, we expected that the market travel back to a certain level of support and then give us an entry from this support level. But see what happened here. The market came back, respected the support level, traveled a bit, and disrespected our swing low. Remember, this church is always first our swing low, then later on it becomes a change of character, right? So when the swing low got disrespected, it means that the market has actually changed from traveling bullish to traveling bearish. So what does that entail? That entails that we start looking for selling opportunities. You get. Then after this change of character, we saw that the market traveled down, gave us another high, and then after this high, the market traveled, give us another low. You get, making this place to become a break of structure. Now let me show you something that normal SMC traders think. Normal SMC traders will mark this as their highest, and then will look for an order block. Let me say they will cover this, the up move before the down move. You get, they will cover that move and then they will set their limit order here, hoping that when the market gets to that level, gets to this level of resistance, it's going to resist. Then they put their stops a little above the high, hoping that when the market comes here, it's going to tap them in and then give them a good risk to reward ratio. Now, is this thing wrong? In general, this is not wrong. You get, this is not wrong at all. This is how normal SMC traders trade. But then we have taken a step forward to update this. You understand? Now, with LTC, now LTC will tell us that, okay, this market will not respect this zone, all that. It will give us a reaction, take out all liquidities that are sitting above the swing high before coming down. That is the work of LTC. LTC finalize, modify, and assure. So that it is. With LTC, we would have been able to know that, okay, this move is going to be respected, but then these highs have to be taken out. Now, this high did not just got taken out. The market actually changed character here. If the market is no longer interested in trading down, then it is interested in trading up. So normal SMC traders will again come here, pick a point of interest from this place, and then place their limit order again. See? Place their limit order, put their stops a little bit above this swing low. So this should be a swing low at first. You see? After this, they will put their take profit in this highs, hoping that when the market comes back here, it stabs them inside and then go back, give them good profit. But then are they wrong in all these things they have done? No, they are not wrong. It's just that they haven't gotten a proper update on what to do. When the market gets to your level of interest, you're supposed to see LTC before you take any decision. You get that another level of trading, another level of understanding, another level of discipline. Okay, so when the market gets here, we want to see LTC before we ride. But people that fail to respect the aspect of LTC, market will come, clear them as liquidity. After clearing them, it will now give us a proper way to enter the market up. Now, you can see what happened here. Now, all these things I am telling you now, I drop them as real shorts. You get YouTube short for people that are following me. They always get the move before it happens. You understand? Let me show you what happened here. After this, we saw that the market also changed character from this place here. What would have saved you from all the losses that occur inside of this place is LTC. LTC will not allow you to take any loss. Remember, as trader, you always look out to protect your capital. After this occurrence, this becomes our change of character. You see how market is changing character like multiple times in a particular trading range, you see? So now, immediately you see this change of character, what's the next thing you do? You mark out the highest point of that trading range. This happens to be the highest point, and this will be our lowest point. You get, this will be our lowest point. So we look out to wait for the market to react from this level, right? This will be our lowest point. So when this occurrence happened, we actually got a trade from here, from this place here, a trade that gave us proper LTC. We got a trade from here. This trade was supposed to be about a 10 raised to the reward ratio trade. Okay, I just marked this so I will explain it to you. But with proper refine, it was supposed to be about a 10 raised to the reward ratio. But the market travel 5 raised to the reward ratio came back and stopped us out at 3 raised to the reward ratio, because we always break even in our trades. Okay, so that even when the market does not want to go our direction, we still gain to secure our capital and then make profit. The goal in the market is to make profit. People that tells you it's either SL or TP, don't follow those kind of people. Okay, people that actually make profit from this market are people that take partial profit. They do trade management and risk management. Understand that? So when this here occur, immediately these highs got taken out, making this high to become a change of character. You can see that. We can see that with the help of LTC, we didn't take any loss here, you get, and then we managed to make profit. Now LTC gives you high risk to reward ratio on the other hand, and then it reassures you that your direction is correct, you get, that the market want to trade in the direction that you are in. You understand? That is what we are introducing, and by the end of this video I will do a forward test and then show you how LTC works. Okay, so let's continue. Immediately we see this, what do? We mark out a point of interest from a certain level of support. You get a point at which we are ready to take action from if the market should get there. Now, remember what I told you in the complex market structure. You get, remember what I told you in the complex market structure. Now, when you see things like this occur, now see this. We had a low here, we had a high, we had a low, then we had this internal reaction. Do you see this? We had this internal reaction here, then we had the higher high. Now, the mistake that most traders do is that they will come and mark this place here, this zone. They'll come and mark this zone here as their swing low. That is one big mistake that traders make. This zone is not your swing low. Okay, why is it not your swing low? It is not your swing low because this occurrence here happened inside of this trading range. Had it been this thing broke out of this change of character, that is when you see, that is when you can confidently say this here is your swing low. But so long it happens inside of this trading range, it remains internal structure. Now you want to look out to take trades from a certain level of support. You get, at the lowest point of that very trading range. This is our lowest point. We have another block here, we have another other block here, so we just allow them and see what happens. Now the confluences of taking a point of interest. A point of interest must have a fair value gap. A point of interest must have an order block. A point of interest must have liquidity. So these 2 points of interest are truly valid. We are going to play price and see how price react from here. Now the third step is liquidity concept. What is liquidity? Liquidity simply means money. You get, money that needs to be liquidated. That is liquidity, you get. Now, the concept of liquidity in applicable to this SMC strategy, it simply means a place where traders are trapped to put their stop losses. You get. Now, this here is not the lowest point of this trading range, remember. But some traders that have little idea of how to read the market properly are putting their entries here and putting their stop losses here and hoping to catch a buy. You get. Now, this is where liquidity comes in. All the people that have their stop losses in this place are the target of smart money concept. You get. Now, the idea behind this is to liquidate a certain number of traders and then liquidate all the stop losses here and fill the orders that are inside of this place or this place. Now, this place here can also be used as a level of liquidity. But then, the thing that is going to assure you about these two zones is LTC. If market comes here and gives us LTC, since market has already taken liquidity from this place, if it comes here and gives us LTC, we are going to ride the market upward. You get. But then, if it comes here, if it's going to respect this place, it's not going to give us LTC. You get. It's going to liquidate this place here, come here, and then give us LTC, and then we ride the market. Okay. Now, some traders are also putting their stop losses here, and they are targeting these highs. You get. But then they are correct. They are very much correct. They are more correct than the person that is putting the stop loss here. You get, because they have at least kept liquidity for the market. They are very much correct than this person. But then what they fail to understand is that we need extra confirmation, extra confluences that this zone is going to hold. If not, we are not placing our trade from here. That is when LTC comes in. So pay attention as I explain the concept of LTC to you all. What is LTC? LTC is a 1-minute time frame type of confirmation that allows us to have a high risk to reward ratio trade. and then reassure us that our move is very much valid. So when we go to the 1 minute time frame, what we want to see is we want to see a break of structure to the downside. That's the last break of structure. After that break of structure, the next thing we want to see is a change of character. After the change of character, we look for our entry from a certain level of support and then ride the market to the upside so we can be able to get more risk to reward ratio. Alright, so this is what we want to see on the 1 minute time frame. Now if we can see that here, we take our buy. If this place gets liquidated, if we see it here, we take our buy. So let's play price and see. Okay, this point of interest has got liquidated, but then let's mark out the break of structure we just saw. We have a break of structure here. Be honest. Remember, after marking out your break of structure in any time frame, remember to mark out the highest point of that break of structure in that very time frame. See this. This is the swing high. If it was an uptrend, we mark out our swing low, but since it's a downtrend, we mark out our swing high. What we want to see in this 1 minute is that the market should come back to this place, either respect it and continue coming down, or it come back to this place, then liquidate these highs and give us a change of character. A scenario where the market gives us a change of character, then we adjust the swing high and look forward to take trade from a certain level of support. Alright, now let's play price off and see how things work. Alright, the market has officially tapped into our final order block. You get, now we are very much assured that okay, let's see the reaction of the market. If it gives us a buying opportunity, we buy. If there is no opportunity, we stay out of the market. That is how you trade smart. Let's continue playing price. Alright, price has broken out of this high. This becomes our change of character. So immediately you see this, you start looking at the point of interest that you have here. Now, when you see this reaction, this break of structure is not sitting. When you see this reaction, you kindly remove the 15-minute time frame point of interest in order to get a clear view of what is going on in the 1 minute. You get. So this here is the lowest point. We now have two other blocks. We have the first one here, and then we have the second one here. You get. Now LTC has been completed in the 1 minute time frame, but this space is very big. You get. This space is very, very big. Now it has been officially confirmed that the market interest is to buy. You get, is to buy. But then remember, LTC also intend to give us high risk to reward ratio. So in a nutshell, I will have to cover the both other blocks. You get, because this is 1 minute time frame activities. I don't really know the real one that the market is going to respect, since all of them have good criteria of respecting. You get. So now the other problem is that this point of interest are giving us a low risk to reward ratio because the trading range is very big. Now, if the market should come back here, we still see LTC in either this point of interest or this one. We are going to take the trade in collaboration with this one. Now, we are risking 1% in this trade, and then we are looking out to risk 1% again in either this one or this one. So let's play price and see how things occur. But then let's go to the 1 minute time frame and see how it goes. So we are going to play price and see how it reacts. Okay, remember our first trade is over 4.61 risk to the reward ratio, right? This is good. Okay, we have just been tapped in. You get, we have just been tapped in this trade, But then let's check the activities that are occurring inside of this place. It has also tapped into the first point of interest. Let me update the both of them. It has tapped into the first point of interest. So after tapping into this point of interest, we are looking forward to update the market structure that occurs within the 1 minute time frame here to get another LTC. You get, since the trading range is big. In a scenario where the trading range is small, you just go with what you have. But then high risk to reward ratio is one thing that LTC gives to us, so we can't risk that for anything. We cannot get a high risk to reward ratio. So now we have a swing high. The market should either come to this place, respect this high, continue going down. Let's know that okay, the market is not yet ready to start buying, it's still pushing down, or it comes here, disrespect this high, give us a higher high, and then give us a change of character. Then we look out to buy from a certain level of the 1 minute time frame support, right? So let's play price and see how things go. Okay, it happens so fast. It happens so fast, but then it's still the same thing now. Immediately price break out of this swing high. Immediately price breaks out of this swing. This one automatically becomes a change of character. Then after this one, we mark out our order block. Now see how this thing is. We have an order block. We have an order block here. You get an order block that is a bullish engulfing candle, but then I mark out the sell before the buy. For a pullback to be valid, you need to have about 3 candlestick pullback for it to be a valid pullback. So when you see me doing this, you know that it's coming out of a place of documentation, right? So immediately you have your point of interest, everything is set. You kindly place your limit order, put your stop loss a little bit below the lows. You get, the 1 minute time frame, swing low is here. Please don't allow this to confuse you, okay? The 1 minute time frame swing low is here. I will have to remove the bigger trade because it might confuse you guys. So then you can see that immediately you have this, you go back to your 3 minute time frame and then see how it looks, and you see the order block is well respected and well organized. Go to your 15 minute time frame, sorry, your 5 minute time frame to check the order block. The 5 minute time frame still have good things to say about the order block, so you are good to go. Where is your target? This is 13 risk to reward ratio. 13 plus 4 risk to reward ratio is about 17 risk to reward ratio. So I share this trade live. You get, now immediately you have this, you go back to your 1 minute time frame. After this, you see that the trade tapped in successfully into the order block, and then the LTC is formed. We have the break of structure, the change of character, the pullback into a certain level of support, and then we are moving. You understand? So after that, you begin to see that if we have waited, let's go to the 15 minute time frame. Let me show you something. For people that took losses in this place, if you have observed LTC very well, then you wouldn't have taken all these losses again. But because you always have something that tells you that okay, market is ready to move or market is not ready to move, you get all the things I'm going to explain to you in this video. Save all of them, study them, go to your chart and practice it, okay? Because when you practice, you get perfect in everything you do. Let's play price. Okay, immediately you have another internal break of structure. You break even because you are working with a 1 minute time frame. You get break even. What's the meaning of break even? Break even means you are moving your stop loss to your entry. You get like this, so that in case anything goes wrong, you are doing trade free. You are risking free. You don't have anything to lose again because you have broken even. You get, so when you break even, remember I break even this trade, both the first trade and this trade here. I break even all of them. Now let's go to a more bigger time frame and then play price rapidly because this video is getting long already. Okay. Okay. Good. You see it, right? Simple. Now, everything I have done here, carry all this in, go to your trading view, replicate the same thing, and try to get better. Okay? Learn this SMC strategy. Visit my YouTube short. You see some breakdown I normally do. Subscribe to this YouTube channel. Turn on the notification bell so that each time we see any move, we will love to share with you so that you will get the notification and then come and leverage on the opportunity provided. You get. We are running a 1 month program for 10 people. The student of January have begun already and they have mastered their market structure. It's just left with a little conferences and we are going to authorize them to start executing. If you want to be among the February people, you love the way we do things here, kindly look forward to enrolling in our 1 month program so that we can build you up properly and teach you how to trade SMC the right way. You get. Strategy alone plays a very small role in your trading. You get. We have a strong risk management plan that when attached to this strategy is going to make you more better and make you a profitable and consistent trader. So guys, share this YouTube channel to your friends who are struggling to trade SMC, and then remember to ask any question in the comments. So remember to subscribe and support the growing community. Take care.